So I think for this period, it seems that it's quite one-sided. So everybody talk about market recovery. Everybody talk about, slowly coming out from COVID and things will get better and better. So of course, that is the general sense. Maybe some of you may disagree. Feel free to disagree. We can hear you out later. Okay, but at least from my research, I think these two newspaper article actually summarize them all. Okay, these two news article actually summarize them all. Okay, this is from the Straits Times. I believe is just last week or maybe 2 weeks before. Singapore economy likely to recover in second half of 2021. So this is from our DPM Heng Swee Keat. Okay, so you can just see from the Straits Times. This is quite recent, as you can see the date 20th January. Okay, by research analyst Selina Ling, quite a famous research analyst from OCBC, if I'm not wrong. Okay, so Singapore economy set for V-shaped recovery this year, but job market may take longer to rebound. So I think economy-wise is expected to recover, and that is the general sense. Can I just at this juncture check anybody is agreeing with this or saying something else? Okay, thank you so much. So John has asked a question. In fact, at the global level, there's appeared to be another school of thought that a market crash may happen. What are your thoughts on this? Okay, so this is what John has mentioned. Anybody want to give a comments? Okay, thank you so much. Patrick should recover by some risk US-China relationship. Thank you so much. Okay, maybe for my answer to John, actually now we are still looking at, I'm actually still looking at the economy perspective. Okay, the economy perspective. So I'm not too sure whether economy-wise, even for global economy, is actually going to slam back. Stock market may be, but we are still talking about economy-wise. Okay, thank you. Thank you for all your comments there. Thank you. Okay, maybe just Raj, thank you so much. So risk for more virus strains. So in fact, yes, even though we are looking at all this good news coming, so there's actually concern about risk for more virus strain. Joel, I don't think will recover so fast as damage created. Thank you so much, Joel. Okay, depend on the speed of vaccine rollout in US and UK. Thank you, Chin An. Sarinta, some little dark clouds regarding vaccine variant, which vaccine may not fully protect again. Thank you so much. SK Tan, last week can see the second wave hitting a lot of countries, so international trade is still badly affected. Thank you so much. Huiling recovery with lots of hiccup along the way. But everyone is printing money like no tomorrow. Thank you so much, Raj. Cautiously optimistic. Thank you so much, Steven. Okay, great. Thank you so much. Thanks for your comments. Okay, so like I said, let's see. So my role here is just to consolidate individual opinion, and let's see what does most people think. So these are some of the inputs provided. Thank you so much. TK Hoon, China and US relations still unclear. These are some of the comments that are coming in. So later while you vote, you may also actually want to consider all this. Then give your most frank opinion. Like I said, there's no right or wrong. Okay, end of the day, market is just a consolidation of individual opinion. Enough people think that you will go up, you will go up. Enough people think that will come down. We are just down here, a very nice sample. Okay, doing a test here. So be frank, be truthful to yourself, and later maybe you can vote accordingly, and we can have a sense whether okay, is it likely for the market to go up or go down? So down here is really like a research, our own research, and it only work if everybody share their truthful opinion. So thank you so much. Anybody else want to add any comments? Anybody? Okay, no. Okay, if not, okay, this is what I've done here. Like I said, I am a 99% FA, 1% TA. So seldom do this. But it's always interesting to also look at things from different perspective. Okay, So what I did was this, I actually go and look at, or in fact, I get someone else to help me also. I actually go and look at the previous sort of crisis and have a sense of how long does it take for them to recover. Again, you know, every crisis is actually different. So this is just for reference. So like I said, you know, if you really want, you can classify this under TA, which I actually seldom use. But sometimes, you know, just want to look at things from different perspective. Okay, now, let's start from at least when we have the STI recorded in Yahoo Finance. Okay, Yahoo Finance. Okay, so, okay, what I've done here is this. So, like, for example, this part of the US recession that's happened in the 1990, 1991, I actually measure from the bottom, okay, measure from the bottommost to where it actually go back up to the pre-event level. Okay, that's what I did here. So, it's not from here to here. It's not from here to here. Okay, by the way, can I just confirm y'all can see my cursor? Y'all can see my mouse cursor, right? Can I just trouble someone to help me acknowledge? Okay, thank you so much. Okay, great. Thank you. So we are not talking about from here to here. No, I'm talking from the bottom, okay, up, bottom, all the way up, bottom all the way up. So like, for example, US recession, you actually take 175 days, okay, almost 6 months for it to recover. Okay, that's how you actually read this chart. Okay, Asian financial crisis, okay, Asian financial crisis, 497 days from the lowest point, okay, back up to here. So 497 days is almost like 1.5 years to actually get back up. This is Asian financial crisis. We are talking about the 98, 99 period. Okay, this is where, you know, why I took very long to actually get my job for myself. Then we have the September 11 attack. Okay, September 11 attack from the lowest point back up. It only took about 126 days, which is just 4 months. Okay, 4 months to get back. Okay, SARS, SARS from the lowest point back up to here. Okay, it's about 273 days, so it's about 9 months, about 9 months to actually get back. Okay. Then Lehman Brothers crisis. Now, Lehman Brothers crisis is the only one that didn't fully recover. Okay. So for information, just in case you didn't know about it, STI actually went up to the high of down here was about 3008. That happened in 2007, 2008. This was about 3008. Till today, after like 12, 13 years later, STI actually didn't breach this mark. Then it fell all the way down to 2004, 2005. Okay, and when it recovered, I think recovered back only to this level, which I believe is about 3004, 3005. Okay, so up to here. And from the bottom all the way up is 576 days, which is again about one and a half years. The oil price crisis, it actually took about 700 days. Okay, from the lowest point 2016. So this is when, if you all can recall, suddenly, you know, the US found shale gas, then the oil price actually go for a very sharp drop. Okay, then so of course the stock market also plummeted, and actually took up about 700 days. This period actually is 2 years. 2 years to actually reach back to previous high. 2 years. Okay, and of course now we talk about COVID. So the pre-COVID level is about 3002 or 3260. Then we have the plummeted. Okay, now 295 day have passed. So this 295 is actually from the lowest point in March. So I think last year April was, we actually saw the lowest point about 2002. Okay, last year April that was the lowest point. Then compared to today, 295 days has passed. All this is where we are. So just some reference again for you to make decision. Okay, like I said, what we are doing here is really a crystal balling exercise. We have combined some FA and TA information. So as you can see, FA, we talk about, you know, people are getting positive. Of course, there are some risk factor. Okay, some risk factor involved. Then of course, we have quite a few friends sharing out some of the risk factors, share their opinions. Then what I'm doing here is actually from a TA perspective. Now, my personal observation, what I see is this. Okay, so far, I can sort of conclude that, you know, how it come down, how it will come back up. This is my conclusion. Okay, so number one, the recovery is always there. So of course, the only outlier is this part, the Lehman Brothers crisis. So this is the only outlier. If not, for the rest of the crisis that we have noted, 1, okay, 2, 3, 4, 5, okay, all of them, how they actually come down, then it will actually rebound back, almost like a V shape. You can see. I mean, of course, you want to argue this is a U or whatever. Okay, this is definitely a V, so it's almost like a V shape. Okay, how it come down and come up. Also, if history is a guide, very likely we will get back to our initial position. Okay, so of course the next question is when you will actually get back up. So that is the one. Like I said, I have no answer. You know, we will just get everybody share opinion, and after that, I'll just consolidate opinion. Okay. The other thing that's actually a bit worrying is that you know, if you actually look at the recent years, it actually take longer to come back. Okay, like the oil price, actually take about 2 years, 700 days, actually take about 2 years to actually come back. Okay, so will we also have this fate or not? So again, I'll leave it up to you to share your opinion. Okay, I have actually put everything in table form. So again, you know, I'm just going to share snippets of information for you to make your own opinion decision later. So I actually just put what you have just seen in table form. Okay, US recession 175 days. Okay, financial crisis about 500 days. 9/11 attack 126. SARS 273. Lehman Brothers 574. This one is partial recovery. Oil crisis is 700. So this is take some time. Average is about 391, and now we are sort of like 295 days. Counting from 5th April, which is the lowest point. Okay. Anybody, any questions or comments from the information I've just shared? Feel free. If you like, you can turn on the mic if you want to. Depending on budget. Thank you so much.
Hey, Emin, this is Karen.
Hi.
Hi, I just thought it's faster to speak. But there's also talk that the stock market doesn't really reflect reality, right? Like, for example, right now, so many countries are sort of going back into lockdown. France, UK, US is experiencing the worst of its kind, but the stock market is not really reflecting what the reality is. So would that affect our estimated recovery time? Because it doesn't go proportionately.
Okay, so if we use history as a guide, stock market is usually 6 months ahead. So if you ask me the reason why, you know, like we are hearing bad news from, you know, the actual economy, you know, the vaccine, the more people are getting hit by COVID, and yet the stock market is performing, is because the stock market is actually predicting next 6 months. That means they believe that 6 months later it will actually recover well. So that's how the stock market works. That means it doesn't reflect what is happening today, but it's more of what's going to happen in the future. Okay, so hope I answer your question on that. At least if I use history as a guide. Yeah.
Okay. Thanks.
Thank you. So I think there's one more bull run. US presidency is formulating one more stimulus plan, but after that, not sure if we're deep. Okay. Okay, good. Anybody else want to share? So for the rest of you, so please don't just sit back, relax out. Later, I'm going to consider opinion. So take in all this information. Okay, take all this information. Okay, I'll be asking the questions very soon. Of course, before that, if you have any questions you want to ask, Then after that, I will consolidate all your opinion. I'll just get you all to vote and see what, as an individual investor, what are you thinking right now? Okay, we will do our first Kahoot exercise. So maybe you all want to take about 5-10 minutes to think of the question. Okay. Then once you're ready, then I will actually do a Kahoot. So later in Kahoot exercise, I will actually ask these 4 questions. Okay. Question number 1, do you think the STI will recover back to pre-COVID level, which is 3260, 3260 within this year? Yes or no? So hopefully you don't have any group thing. Really state your opinion. Okay. Really share what you think. That is what we want to do here. We want to know how does how does the whole market is likely to react. So this is a yes/no question. Okay. Second question here is how long more do you think the STI will take to go back to pre-COVID level 3260? You will not go back. About 3 months, about 6 months, about 12 months. So this is the second question. Okay. Then for the third question, what is your STI prediction for December 31, 2021? So the last day of this year, where do you think STI will be? Okay. And in fact, the most important question, so end of the day, why are we doing all this prediction exercise? Is to, answer this question, how much should you actually invest today? Okay. How much should you actually be invested today? So that's the whole point of this whole exercise. So again, this part, we want to hear your views. If let's say you have $100,000 investment today, how will you deploy your funds? Is it invest all today, invest 50% today, invest 10,000 per month for next 10 months, which is basically dollar cost averaging, or you won't be investing at all today? So thank you so much. Thank you so much. So of course, hopefully this one is a good guiding principle to everyone. Like I said, wow, it's actually quite a surprise to me. In fact, I was thinking that people are more positive, so that's not, then maybe I should be a bit more cautious. Thank you so much. Okay, I just want to share what was my answer. So do you think STI will recover back? For me, it's a yes. How long more? In fact, I was thinking between 3 months to 6 months. Personally, I was thinking between 3 months to 6 months. Since I am a bit overly positive. So thanks for helping to pull me back. My prediction, my personal take is actually 3,000. It's actually between these two options. Okay, but of course, to be safe, I put 3,000, 3,005. And currently, I would actually invest 50%. My personal thing is I would actually do 50%. So hopefully this is a good reference for everyone. There's actually some question. Yes, we should revisit. Is it because everyone is more bullish on other markets? Hence, I don't know. Anybody want to comment on Cheryl's question? So Cheryl think that it's because everyone want to go US, not in Singapore. I think that's what Cheryl means. Feel free to comment. Anybody, if you want, can unmute yourself and share. Okay, thank you so much, Lei Hun. Thank you. Anybody want to comment on Cheryl's comments? Okay, if you actually want to talk about the US market, so again, I tend to be more cautious. Of course, I'm coming from a very fundamental perspective. So I also have taken a look at some of the US companies. To be very frank, using my 6 tests, my FA, I can't see a lot of companies that pass my test. I think I last checked Tesla, the P was at 1,000 over times. Starbucks, I think Starbucks is negative equity. Negative equity means that if you take total asset minus total liability, you get a negative number. Or put it this way, if let's say Starbucks collapse today, really get nothing back. Okay, so having said that, my point here is this. I'm not saying US stock is no good, but you probably need another set of thinking, another set of understanding to invest in US stocks. Okay, so for me, I'm so stuck to my own FA. That's why I'm not going to US stocks. But if you do, you probably need another set of understanding. So I'm not too sure whether US is slightly over bullish right now. Okay. Okay.
Even just talking about
Yes.
This is Raj. Just talking
Yes.
about the US market briefly. I think in the US market, there seems to be a distinct difference between value stocks and growth stocks. Right?
Okay.
And I think value stocks have fallen behind, and I think that's what your analysis is also showing, is that there aren't many value stocks in the US market at the moment. The S&P 500 is being driven by the big growth stocks, the FANG stocks.
Correct. Yes.
And I think there's also this effect of these platforms like Robinhood, where the dealing cost is almost free, if it's not completely free, which has drawn many more people to the market than otherwise would be the case.
Yep, I thought so lah. So of course, because US there's a lot more participations, definitely there are more speculative or more optimistic people, into US lah. Yeah. Okay, I mean, as to whether the US, the value stocks have fallen, sorry, I actually didn't really go into that level of research. Like I said, I only just pick up 1 or 2 US stocks. Then I realized, it wouldn't pass my test. Yeah. So my point is, US stocks, yes, you may need another set of criteria to analyze them. Okay, there's some questions. There's a question. Yep. If we invest 50%, means have to sell some stocks. Okay, Kachong, I think my answer is no. Okay, so personally, just now my question is more towards, if let's say you have a fresh funds, so let's say today I have a fresh funds of 10,000, how would I allocate? Doesn't mean that my portfolio, my whole portfolio, I will keep to 50%. No. Okay, so current my portfolio, to be very frank, is actually about 70-80% in already. 70% in. If you talk about my whole everything portfolio, 70-80%. In fact, probably I would say 80-90%. I'm thinking, if let's say tomorrow I strike jackpot and 100,000, how will I actually invest? Yes, I will actually still put 50% down. Okay. From Sarinta about Black Swan, yes, that's concern. Okay, why 50% when expecting recover to within 6 months missing? Yeah lah, but as per, thanks Walker, thank you for the question. Why 50% when expecting STR to recover? So I think your point is, why not 100%? So apparently, I think in fact after today, I'll be a bit more cautious. So given that, quite a lot number of people still not very positive. So yes, okay. So my point here is this. Yes, I believe that, December 31st is going to be higher, 3,000, 3,005. The question is how the path actually reach there. So I believe that, maybe you will have a little dip before you go back up. So that's why I only put 50%. Oh, thank you so much, Winter. Yes. Yep, you have actually helped me to answer. So even though, I do agree that long-term wise, it should be about 3,000, 3,005. But along the way, there may be dips. Thank you. Okay. Sorry, PC, I think your question is not so relevant right now. We will actually talk about all this maybe after the session. Okay. So great. Thank you so much. I think we have finished this part of the exercise, unless anybody else want to add any comments or anybody else want to have any other questions. So this is part 1 actually of the session done.
I just got one comment to add. I think in many of the things that we are learning over here, for the Singapore market in particular, we are looking at income, dividend flow, right? I mean,
yes.
investing for dividends. That's
Correct.
the long-term perspective, right? I mean, growth is a nice to have, but our primary target is income.
Okay, from your perspective, compared to US, then it's yes lah. But if you ask me, like, for example, I bought DBS like 6 months ago. Today, it's a 50% gain. To me, it's a growth.
Yeah, sure.
Yeah, but I do understand where you're coming from. Relative to the whole world, yes, Singapore is relatively more for dividend. Yes. Okay. US market bubble burst. I am Okay, I don't think it will burst. I don't think US market will burst. I think max is maybe a little correction. I doubt it will burst. Okay. Of course, unless like suddenly Tesla declare bankrupt or whatever, which is also a possibility. I doubt it will actually burst. Yeah. Okay, but do expect certain correction now and then for US market.